Do you have a crystal ball right now? Because things seem so cloudy with inflation, Russia, COVID still, supply chains. I have no idea what's going to happen.
I am sorry to disappoint you, but no, I don't have a crystal ball. And I don't think that we're going to get a lot of certainty anytime soon, unfortunately. So, would you want to know what I think will happen?
Yes, please.
Well, I think, and I'm not alone in this, that Vladimir Putin committed one of the biggest strategic blunders in the last 100 years. And I think he's backed into a corner. And I don't see a way for him to get himself out of that tight spot anytime soon. So I expect this volatility to continue. And again, I don't think that I'm alone in that. As you likely know, typically geopolitical events like this don't have a durable, long-standing impact on market prices. But in this case, the impact on commodities and the spiking oil prices are problematic for economies across the world, including ours, even though we have much more energy independence than we did back in, say, the 70s. So I think we're in for some continued
paying $5 for natural gas, not $30 equivalent like they are in Europe, going to everything from fertilizer prices to electricity costs. But here's the thing, Emily, we're talking about the Fed. They're going to probably raise rates. Next week? I think it's March 16th is when they're going to do it. They've basically hit us over the head with that. But the government keeps blaming inflation on the war. So if the war is the reason for inflation, which we all know it's not really, at least not all of it, can the Fed do anything about any war-related inflation?
The Fed's in a tight spot. I thought it was interesting that Chairman Powell came out and basically said that, we're going to get a quarter-point increase. And I think we're expecting now closer to 4 rate rises than 6, which we were expecting prior to this war. But yeah, they're walking a very fine line because we already had inflation, as you pointed out. And so these spiking oil prices have increased the risk of stagflation, which is not an outcome that anybody wants.
What would that mean for equities if we had stagflation? Would it change the Fed to become more loose, which we all know when they become more loose, stocks tend to go up? Do you think, in other words, Emily, that the bottom, I'm not saying the bottom is in, but is the bottom potentially close for the year, or can this just kind of slog on for months and quarters?
I think this will slog on, but I do think that part of this, the impact of this conflict has been priced into the market. And I do think, as you point out, the upside here is that we are likely to get fewer rate increases than we would have otherwise. And so I think that's why you've had some of these big surges in the market, because we will likely have a longer continuation of the liquidity that we've seen, which, as you know, has been driving the market for the last year and a half. So yes, there are certainly some silver linings, but I expect continued volatility now through the second or even the third quarter. And as you probably remember, we felt that U.S. markets were overpriced, very overpriced coming into the end of the year. And we were expecting a rocky quarter or two. I think it's going to be more prolonged now.